Bitcoin's up another 4.5% today, setting new records for 2023. Today is the highest daily close in 2023 and the highest daily close for over 305 days. You have to go all the way back to the catastrophic events of 2022 in the bear market during those capitulation events down to $17,000 and $15,000 before you see a higher close. So is this still the biggest bull trap of all time? Is the world still coming to an end with all of the fear, doom, and gloom happening in the US and around the world? Today's video, let's unpack that a little further as each day we run into the peak of this bull market top. At least the first section of the Bitcoin bull market just gets us that day closer to when we'll need a flip and a pause before the bears do enjoy their party cake again. But before I get to that point, thank you very much for considering my age in yesterday's video, thinking I'm only 25 with 12 years of trading experience. I'm actually 37, so yes, I did start trading at 25. I am not 25, but maybe I'll put out another ebook on how my skincare routine and health benefits go with my diet. Anyway, the real thing here is that we have our free crypto and economic report coming out tomorrow, 24 hours time. Link is in the top of the video description. Where else would it be? You know where these links are, right there. And for the Aussies and you guys there wanting ledgers, there are some freebies with BTC. Top of the video description. Ledger doesn't give them out all that often, so go and check it out if you need a crypto device. Okay, so let's start off with a few quick things on the S&P 500 before we get to BTC and the bears flipping bullish and why that has to happen before we see a peak in the market. So smart money, dumb money. I'm glad I found a chart on this so that it could explain to people the difference between smart money, dumb money, or at least give them an explanation of these words being investing terminology. So it's the confidence spread here. Basically, all we're looking at is the S&P 500 price chart, which is the black line at the top. The blue line is the smart money, dumb money confidence spread. When you get peaks at these points, this is essentially bottoms on the S&P. When you get lows on the blue line, it's pretty much around the tops. So it's basically the dumb money getting overly optimistic. You can see here excessive values, and then excessive pessimism is the other side here. So basically everyone getting too scared. So you can see the bottoms come in, and then the market likes to flip. This doesn't mean that it's the all-time high down to the cycle low, back up to all-time highs. It's pretty much just looking at the ranges that are forming throughout the price cycle, throughout the cycle essentially of the S&P. So what we recently saw was a short-term peak here in February. So you can see that the optimism got a little bit too out of hand when the top was coming in. However, we had the March collapse, the banking crisis, which if it was really that scary, it needed to take out the December low. It needed to get back to the October lows, but there were people buying. There was smart money buying up at those lower prices because now we've seen a rally go up to about 4,150 odd points there. And we're just starting to see it pull back into the middle point here. So maybe if we do drop below the red line again here, the dotted red line, we'll see an intermediate top, maybe have a pullback. But essentially, while we remain in the zone between the red and the green, then the market can track sideways until it resets and then can go on another move up or down. I'm obviously expecting something up over the course of 2023 based on a lot of that historic data that says that we should be getting a positive year in 2023, a positive result. Not the economy, not the bad stuff that's happening to people, not all that sort of thing that's going on in people's lives. We're here to invest. We're not here to be counselors to everyone who is caught up in the emotional turmoil of the economy. All right, we're here to invest. Let's put the emotions aside and just grow up. But for now, let's have a look at the next piece of data. Bears reload on equity shorts. This is some of the highest shorts that we have seen since 2011. Typically when this happens, you get some of those short squeezes, those blow-off areas where the bears get wrecked. So it kind of comes into alignment here with the S&P price chart. We're expecting over the course of days or weeks, not as soon as you watch this video, of course, but expecting some sort of move to the upside, passing 4,200 points on the S&P. The reason this is important for Bitcoin and crypto is that we need to see all the markets positive. They haven't decoupled yet. They might not in our lifetime, so we'll wait and see. But essentially, if we want to see Bitcoin and crypto go higher, we need to see the rest of the markets also go higher. And we're seeing that with the S&P, we're seeing that with the NASDAQ, and real estate is also bottoming and in some cases actually going up in many markets. Yes, a lot of people still believe it's not the case, and I'll try to prove you with some data. But when you get out there and go to the auctions and you go to open homes and you put in offers for properties, which I've been doing, prices are going up. Sure, you might just say it's my area, but I've also got tweets on that as well. So go and check that out on Twitter if you haven't already and see what other people are finding in their areas all around the world. As we're saying, we're expecting this to be the second half of the real estate cycle with everything going up for the next few years before we get a catastrophic collapse. There will be a big collapse, but for now, the party is only just getting started for one last dance. And the dance right now is basically in the favor of the bulls, but it will come to an end at some point. Doesn't mean that I think the low is going to get taken out, but we have been up for 140 days. Keep that in mind from that low on the 21st. If you want to measure it back to the FTX collapse as well, which was a couple of weeks earlier, gives you about 152 days. So I'm going to go to the precise dollar low, the value here at the bottom, which was 15,473, 140 days. Eventually, these things will roll over. So we have to see where the high lands. So far, you can see the market trading now at 29,800 with a high of today at 29,900. Probably by the time you see this, maybe we would have cracked $30,000. And that's the first time Bitcoin would have hit 30 grand since June of 2022, basically 10 months ago. So hopefully we get there. Let's see what happens. It has just broken out here. And this is why I'm seeing the bears just begin to flip bullish, because we had a pretty significant resistance level here. And each time a new resistance level gets taken out, the bears mentally, psychologically, they start to flip to the bullish side. And it's only until the majority of people are in that bullish camp, depending on your time frame. Let's not get confused here. We're not talking about all-time highs. We're just talking about a period within the first stage of the bull market, just like what we saw in 2019 as an example here. There was a lot of bears all the way up in this market here saying we got to get rejected and come back down, and it broke out. We got to get rejected and come back down, and it broke out. And then because of how fast this pace was, everyone was basically waiting for $20,000. If you were in the market back then, you will remember when it started to hit 12 and 13,000, everyone thought, could this really happen? Could we go to 20,000 straight away? And then it wrecked everyone from that point. So it wrecked the bulls. I'm just saying, I don't think we're there yet. I think we're either going through this little stage here or this stage right here. I would possibly say that we're probably closer to this stage at the moment. Don't worry about the dates down here. I'm just saying the stage itself. We're potentially in this little stage here. How long has it got to go? If you watched the video on my channel from last week, we looked at time analysis. So I'm looking at a particular time, whether it's the end of this month or early in May, to come up with some sort of peak in the markets. But we're not there yet. Let's just continue to track the charts along the way. Make sure you have subscribed and liked the content up. I can't think of anyone else that gives you time targets in the space. Everyone gives you price targets. Price targets are a waste of time. Time is the most important. So get time into your trading plans and you guys will do absolutely amazingly well. So that's where I think we're at right now, somewhere around here, probably leading into this last leg before the bulls and bears and everyone are in the same party. And essentially the party's over by that stage and we go on a long streak to the downside. But as you can see, we did not hit the previous low. This was a pandemic. If we don't get another major black swan event, then we probably won't break past the low wherever that low happens to form. For a lot of new investors or traders, I guess people maybe who haven't been around the traps for long enough, taking a side on either end of the market, a bull and a bear, might sound like it's flipping and flopping. But as an experienced long-term trader and investor, you guys will probably know this for yourself if you have been in the market a while. You need to take a position on both sides of the market and have an idea of where you think it's going next, because you have to take a trade, you have to invest. So you need to be prepared for both. And like I'm telling you, I'm giving you my time targets. Price targets, we'll wait and see where the price comes out at when the time is up. And from that point, then we look to the downside. Then we have to flip and flop to the bearish side, because there's no point in continuing to yell out bull, bull, bull when the market is in a stage of a downtrend. Just like what the bears have been doing for the last 140 days, calling bear, 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 biggest bull trap of all time. The world has to collapse, the US banking collapse. There's going to be more pain to the downside, etc., etc. Eventually, the top comes in for the stage of this first stage of the cycle, and then we head back south, just like I explained what we saw in 2019. The overall trend, we're still in a macro bull, but it takes some time to switch and flip and flop between the bulls and the bears before everyone agrees it's bullish and everyone's in the camp and we are going mega bull. We're not in mega bull mode just yet, but we are in the first stages of the bull market. Like I said here, all trends face exhaustion and time is running out for the bulls, just like we're looking at here. Remember, time is the most important. Don't get trapped in the old, it has to go to $50,000, it has to go to $100,000. It doesn't. It's the time aspect. Wherever the price ends up at that point in time, that's probably where it's going to finish. Okay, so basically, just because I think that a top is going to come in soon doesn't mean that I think 15K is going to get taken out. So your bonus here is, I don't think 18K is going to be seen again. Probably not even below this low here at 19.5. So as a round number, call it 19, call it 20, whatever you want to do there. But I will reserve my rights until the top comes in. I need to see where the top comes in first to give me an idea of how far down I think the market will go. If you remember a few weeks back, we also looked at the macro volume at key turning points for BTC. Now, this is a technique that has been used forever. It's basically Wyckoff analysis. And what we're looking at here is, are the trends becoming exhausted? And is the downside becoming exhausted? Is the upside becoming exhausted? Basically, at each of these points for Bitcoin, and it's one of the easier markets to see when we compare it to traditional markets, not comparing to other cryptos, but it's an easier one to see when the market is doing something. Basically, a macro signal here. Like we can see with the volume of late, we're looking at the bottom probably being in November. We talked about this on the channel. Make sure you like the content and subscribe. While everyone's calling macro bear collapses to $10,000 and below, there were calls at $3,000 and $6,000 and any number below where it currently was. We were looking at this probably being the bottom because extreme volume came in, very, very, very high volume. Basically, a lot of Bitcoin was traded in November, meaning that the price, or because the price didn't fall further, that meant that it was likely going to be the bottom because there was support volume coming in. There was stopping volume. There was basically a lot of people buying up a lot of that Bitcoin that was getting dumped because of the fear in the market. And I've read a lot of your comments in the comment section where some people did unfortunately get caught up in that, going to the extreme fear side of the market. And that's why we think that that is the bottom there. Now, you can also see this happen on the breakout, some increased volume as the market begins to break out. You can see we've got some increased volume compared to the previous month. For March, again, a breakout. We also talked about a key signal here of the double top getting broken. And this meant, because it was a failed bear signal, it basically means that it's going to be a pretty decent bullish move, or flip side to the bear, which is obviously the bullish move. And it's going to be a pretty decent move to the upside because the bear signal failed. A failed signal is typically a signal within itself. So keep that one in mind. There's your trading tip for the day. Look at that one there. Bottom, extreme volume. We have bottom, more extreme volume when you compare it to the last several months. Top, volume. You can just basically go through this entire chart, which I'll post over on Twitter. So make sure you're following over there. And a quick reminder to subscribe to our free newsletter, our crypto and economic report coming out tomorrow. All right, so we had a look at that for BTC. Crypto. Is crypto also breaking out? Total cryptocurrency market cap, of course, 50% of this, or 48, 49% of this is made up of Bitcoin, but the other 51% is also having a pretty good time here with prices going up. It's broken past this level here at around 1.125 trillion. We've also continued to break higher above the logarithmic downtrend, and we are now the same sort of deal for Bitcoin as Bitcoin was, 305 days, highest close. That was the previous highest close for the total cryptocurrency market cap. So we're starting to hold up here. It's early days. Maybe we still see some downside on the total cryptocurrency market cap, because remember, this is still made up of 50% of other cryptos, not Bitcoin. And so they still have the possibility of moving down. But while the trends are up, you've got higher lows and higher highs. We've got to stick with the trend. But I say the same thing remains for total cryptocurrencies. As I said, for BTC, the days are numbered. We're limited here. I'm looking towards April and May, as I said earlier. I'll have those video links popping up at the end of the video, so stay tuned to that over on your left-hand side. But apart from that, crypto is also breaking out while Bitcoin does. However, the Bitcoin dominance is going higher, which means altcoins are probably getting bled out again. You can see them here in the negatives. The BTC pairings are more negative than the USD pair, which means Bitcoin is taking the majority of the gains and the altcoins are getting bled, which essentially means it's not time to be DCAing or long-term investing into altcoins. We need to see some more stable foundations form for the BTC pair and BTC dominance to go in the opposite direction. That will be the time that we're ready to be investing long-term into altcoins. At the end of the day, that's how I trade it. You do you. Like and subscribe. As long as you do that, I'm happy. And I'll see you guys at the next video. Let me know in the comments section, how old do you really think I was? I am 37, but some people still think I was in my 20s. So anyway, enough said. See you at the next one. Till then, peace out.